Hi, everybody. Andy Salvucci from Abstract One. Glad to be here. I often talk about title to people. It's odd to actually be in a room with people that know kind of what I do. Usually when you talk about title, I'm sure Chuck can probably say, people kind of get a glazed look over their eyes if they're not involved in real estate and have no idea what we do for a living. I get calls from people that ask me, my plumbing just broke in my house. Is that covered under my title policy? No, it's not. So it's good to be in a room with people that know what title is, and looking forward to talking to you guys. So my background, I'm an attorney by education. Don't hold that against me. Got involved doing closings back in 1998, working for a law firm and a title company in Fustabile, and have been involved in title ever since. I've closed, it's probably too hard to count. I can't even count. Thousands of real estate transactions, both residential and commercial. Current company that I own now, we are licensed in Pennsylvania, Delaware, and Florida. So we can close a deal anywhere in PA, anywhere in Delaware, and anywhere in Florida. We do residential and commercial as well. So when I talked to Don actually came up with the topic, so thank you for coming up with the topic, is solving the mystery of title. Just to give some insight to you guys just about what we kind of do on a daily basis, some of the topics that I think are interesting and important for you guys if you're going to be buying properties. So what is title insurance? The basic is title insurance, a policy of insurance that we issue to an owner or a lender, generally ensuring the quality of title for the owner or for the lien that is set forth in that policy. What's different about it than most types of insurance policies are we insure from a certain date backwards, where most policies insure forwards. And usually that date is the date of closing. Types of policies, generally three kinds. I mean, you can hear about an owner's and lenders are the two ones you hear about the most. Obviously, an owner's policy is going to insure somebody buying a piece of property, an owner. A lender's policy is going to insure a lender who's lending on a piece of property. We can also issue leasehold policies. Nobody really knows about it. I've done that a lot, mostly in a commercial context. You can issue leasehold policies. You can issue a policy to a lender that's giving a mortgage on a property that's leased. And you can also issue a policy to someone that is actually leasing a piece of land. No one knows about it, but it does come up often in a commercial context. Some states as well, I think Maryland and some other states, where when people actually buy properties, they're really almost buying like a 99-year lease on a piece of property as an owner. So you can often do leasehold policies on that as well. So I just thought that was interesting because nobody really knows about it, that we can do leaseholds too. I kind of wanted to bring this up first, and I was talking to a couple people here today about searches. I've been doing this 20 years. There are so many different types of searches out there. It's still amazing to me sometimes when I talk to search companies about what they can offer as far as a search. And the reason I wanted to bring it up to you guys as investors is if you're ordering a search from somebody, find out what they're actually doing. I have people call me that say, hey, can you do a search on this property? I'm going to buy it. I actually just had a realtor email me today, just now actually saying, we're going to be listing a property, do a current on it. I want to find out what's on there. Well, again, there's different kinds of searches. The basic is like a current owner, or you can call it a mortgage and judgment search, is really only going to show you who currently owns it, what mortgages are on there now, and what judgments are on there now, basically filed against the current owner. You can do a two-owner, where you go back 2 chains. You can do a full 60, where you go back 60 years. And I guess the point I'm trying to relay is, for the realtor that emailed me, I can do a current on it. It'll show him who owns it, what mortgages are on there, what judgments are on there. But it's not going to show everything that's going to be shown in a title commitment if I produce one for that piece of property. Because when we do a title commitment, I'm generally going to do a 60-year search. So I'm going to go back 60 years in time, check all the deeds, all the chains of title, and bring up anything that could be a problem. There could be an estate from 20 years ago, where maybe somebody didn't sign off on a deed that should have, or maybe an inheritance tax wasn't paid. You see it all the time. That's not going to be shown on a current owner search. So if you're buying a piece of property, whatever title company you're using, find out what kind of search they're going to give you. And if you're going to be buying, go ahead. You have a question? Go ahead. Yeah. So I mean, to me, it's just kind of like the standard in practice that's been there since I've been involved 20 years. So it's just a standard of practice. Like for me to insure somebody purchasing property, they want me to do a 60 generally. I mean, there's exceptions to it. Some people do less, but that's kind of like the standard time frame to search back if you're doing a purchase and issuing an owner's policy. So it's just custom.
Have you ever done anything greater than 60?
No, I have not. No. Oftentimes it's less, but that's kind of the long term if you're doing a purchase. But again, so if you're going to be buying a property and you're going to a title company, find out what kind of certs they're going to give you, because you may not be getting the full picture. If you do a current as well, it's not going to show an easement, a restriction generally on there. That searcher may not even pull it.
Bill,
Yeah.
use the microphone, please.
But in my case, where I go and buy at a sheriff's sale or a foreclosure, they got it with a clean policy for the bank or for their lender and everything like that. So why wouldn't that have been picked up there if they did the 60-year?
What do you mean? So just explain again.
The estate, like you said, you
Yeah.
go back 60 years, sometimes you'll find
Right.
an estate or something else.
Right?
Well, if I buy at a sheriff's sale,
Yeah.
I only do the last owner. I don't do,
Yeah.
but
Well,
that if
go ahead.
the person that issued the title insurance for the people that got foreclosed on, why wouldn't that have been picked up then?
Well, the answer to that question is people miss. And I'm sure Chuck can attest. I mean, I can't tell you the amount of times I get a call where I'm doing a title and there's something on there and somebody says, wait a minute, that was taken care of before, and it wasn't. We just had one where I think we had to pay inheritance tax on a property, and the current owner wasn't aware that it was an issue. And they have a title policy that was issued by their title company that missed it. So things get missed all the time. So that's,
If it's
No,
missed by
that's
the-
not everybody gets title insurance.
Exactly, right, yeah.
Unfortunately, not everybody
Yeah,
does. So it could be that there wasn't title insurance.
I mean, you're assuming it was insured. Hopefully it was. But again, you don't know who did the search. Did they miss something? Was it done correct? You don't know. And in that title policy, something could be accepted and not covered that you don't know about. You know what I mean? So that's why I always say that, the longer search you can do, the better.
If it was covered by an insurance, title insurance, then is the title insurance company now responsible
Depends.
for something they missed?
Well, it would be dependent on who's filing the claim. You know what I mean?
No, I don't know what you mean.
Well, I mean, I'll give you the example of the one I'm dealing with. So we're insuring a sale where the owner of the property wasn't aware that there was inheritance tax due in his estate. So they're going to have to file a claim against the title agency for missing it because they have an owner's policy where it wasn't accepted. So in that case, they have a claim and they can file it against their underwriter for the title insurance that's due. So it's going to be either an owner or a lender filing a title claim. But like in his case with, he's coming out of foreclosure, I don't think that lender is going to be, I don't know if that lender had filed a claim. It may protect him. It may have cleaned it up. It may not. You don't know. You know what I mean? If that lender was foreclosing and was having a claim, maybe they filed one. I don't know.
In general, we don't know what you mean, so please explain it.
Well, I mean, I guess the specific example, if he's buying a house out of a foreclosure and he's assuming the lender got a lender's policy, right? And he's assuming that something would have picked up. And I guess your question was, if there was something that was on there, could that lender have filed a claim on their title policy? Was that?
Yes.
They may have. I don't know. Would it help me? I mean, if the claim was taken care of and cleared up, yes. I mean, that's.
All right, Gary?
Yeah.
Yes. I'm curious what your experience has been, if any, on when a property is inherited.
Right.
People aren't typically going to buy title insurance when property is inherited, are they?
Well,
Depends. I mean, if it is, if they're not getting title insurance, then anything that's affecting that property at the time of the transfer is still going to be there when I possibly insure it down the road. So they should have a search done or obviously have an estate attorney handle everything to make sure it's done right. We probably spend, I can't tell you the amount of time we spend clearing up issues with estates, mostly inheritance taxes, which are often not paid.
Is
And
transfer
nobody-
tax required in an inheritance?
Generally, no.
Oh,
Generally,
really?
no.
Okay.
Yeah.
So when the father passes away and wills the house to the daughter,
If it's coming through the will, like to a devisee or an heir, it would normally be exempt from transfer tax.
Okay, but
Yep.
but it's not exempt from any
Like inheritance taxes or estate taxes?
well, that and faulty, not a clean title.
Sure, yeah, because nothing's being insured, right? So it has to be done. So we see it a lot where primarily inheritance taxes or estate tax is not being taken care of, or possible heirs of that estate not signing off their interest on a deed. We actually just had a property in Bucks County. Someone passed away. The deed was done by the estate attorney out of the estate to a dead person, which is Yeah, that's right. Which is, when we saw it, we're looking at it, and we couldn't figure it out. We talked to the attorney. This was 18 years ago. He has no idea why he did it. But he did it out of an estate to a dead person, which technically on my end is void, meaning you can't really transfer property to someone that's dead.
Really?
Big issue, right. No one seemed to care. No one cared.
He won't show up at the
The attorney wasn't concerned at all. So we just had to kind of go back and find who all the heirs were of that first estate and have everybody kind of sign off to the new buyer to kind of clean it up. It wasn't that hard, but that's the kind of weird stuff that we see all the time, unfortunately, but, all the time. So again, just getting back to the search, my main thing to convey to you guys is if you're getting one, find out what kind of search they're doing so you know what you're actually getting.
What are some of the warning words you should listen for when a title agent says, I'm doing X kind of search? What should you really ask them to do?
I guess you could kind of ask them, what is the search going to show? And maybe probably the most important question is, if I'm going to be buying the property, is there something that may show up on a title commitment that's not on the search? That's the biggest thing, because the title commitment is really what you're going to be looking at as a buyer when you're getting insured. That's going to have all the requirements on there from the title agency or title underwriter that have to be met for me or somebody else to insure it. So the search may not show everything that's on a commitment unless you're doing a full, or unless you're getting a title commitment.
By the way, just to let you know, we have buyers and sellers in the audience from Bucks County, Montgomery County, certainly Philadelphia. Anybody do any business in New Jersey? Yes, so you're New Jersey as well. Right. So that would be helpful if you could point out any of the differences.
Mm-hmm. I'll go through it. As I go through here, I'll try to point out some of the differences in the states.
And Delaware County.
Well, Delaware County is a nightmare, but that's for recording issues. I can't even tell you. But so basic policies. First one I kind of talked about, owner's title insurance. That's going to be issued to you if you're buying a piece of property. Somebody buying it is going to get an owner's policy. Generally, what is covered? And I kind of just list some of the basic types of things that are covered, because again, nobody really knows what we cover and what we don't cover. So basic owner policy covers you if someone else is claiming an ownership interest in your title. Kind of like what I talked about with the estate we had to clear up. We cleared up that estate, so we knew there wouldn't be somebody coming out of the woodwork saying, hey, wait a minute, I have an interest in that estate. And they weren't aware that the property was sold or transferred. Forgery, covers forgery. Your ability to use the land, unmarketability. So in other words, we're covering you that you'll be able to sell the property down the road. Access to and from the land is covered. There's all different kinds of access that can be insured. I'll get to that in a little bit. The basic policy just states you're entitled to access to and from your land. Doesn't really guarantee the kind of access. Doesn't mean there's a road. Doesn't mean necessarily anything. Just kind of means you can get to it. So sometimes people get endorsements, and I'll talk about that kind of towards the end, kind of additional coverage on their policy to kind of really explain the type of access you can get to your land. People often ask, are there ever any kind of claims? Well, there are. I talked to one of my underwriters today, and they said they have a ton of claims regarding powers of attorney. People use them all the time. We never like using them. I'm sure Chuck would say the same thing. And every time we're given one, we say, do you have to use it? Why are you using it? Is the person around? Can we just get them to sign a deed? No title company likes using powers of attorney because there's claims. One of my underwriters is Old Republic. They just had an issue where husband and wife owned a property in Pennsylvania. They were living in Florida. Their son drew up a bad power of attorney. He basically drew it up, forged their names to it. Sold the property. No one picked it up. Title company didn't realize it. Realtors somehow, I don't know, who knows, didn't pick it up. Property was transferred, sold to a third party, for value. Parents find out down the road. Title company had to pay a claim of like $200,000 on it. So that's the kind of stuff that we see with powers of attorney that are scary.
Doesn't it require a notary?
It does, but there's lots of things that appear notarized from my experience that, Sure. And I don't remember the process. It's been a long time since I've gotten my notary, but I don't think it's the most complex thing in the world to get one. And there's a lot of deeds that appear, say in Philadelphia County, that are notarized, and no one knows how. So that's something we see a lot too. So just the fact that it's notarized, who knows? Doesn't necessarily mean it was done in a valid way. You know what I mean? So I don't know. How that one was notarized, I don't know, but
Can I just make a statement? Because there's some new people in the room, and I just wanted to explain to them what happens with the title search, just to give them a very basic. When you get a title search that is being spoken about, the search shows what interests are recorded against that piece of property. Okay, what mortgages, what liens, and in order to have clear title, in order to have a title that is clear and marketable, if there's anything that shows on that title that shouldn't be there, when you buy a piece of property, most of the time you're going to have a mortgage that's recorded against it.
Yep.
But if there's anything that's there from prior to when you bought it, you want to get rid of it. Okay, so a title search is only as good as you looking at it, you or your title company or your lawyer looking at it and making sure anything that was there previously is removed.
Sure.
Okay, and I just don't know if the new people understand
and that's
that.
what we'll get to too, is to have people actually look at their titles.
Right.
Nobody does.
Unless they have a lawyer.
And half the time the lawyers don't look at it. I can't tell you the amount of closings, and I'll get to that, but she's right. You got to actually look at the title commitment that's being issued to you, and I'll get into that in a little bit, because a lot of people just don't. They just assume title's title, they put it in their file, they move on. So there are title claims, POAs, big area. If you're using one, get it to your title company as early on in the process as possible so they can look at it and get it reviewed.
POA is?
Power of attorney.
Okay.
Get it reviewed as early as possible for your title company. Lines of credit, our underwriters have a lot of claims on them. So if I'm insuring somebody selling a property, I get a payoff. We do everything we can to make sure that line of credit, a HELOC is a line of credit, a mortgage on a property where you can draw on it. We get a payoff figure, and we try to confirm, obviously, as close to closing as possible, that it hasn't been drawn on, God forbid. But there are times when people draw on it the day of closing, the deal closes, the payoff we send in is short. Now we're on the hook for the difference. Happens a lot. And I think the other area too is like taxes, water. They're kind of smaller areas, but when we basically insure somebody with title, we're doing a search to make sure any lienable items are paid, meaning real estate taxes, water, sewer, if it's lienable. But there's a lot of times when, who knows, bills are not done correctly. Maybe we pay the wrong amounts. There's always lots of little issues with water bills. Go ahead, Don.
So actually on today's Dig Answer line, Beth, I don't know if you saw this or not, an apartment owner was asking the question about if a tenant leaves and doesn't pay the water bill, is the apartment owner responsible? And there was an answer given to that. But now let's take it a step further, and the landlord decides he wants to sell the property to another party.
Yeah.
Is the tenant's water bill transferable to the new owner?
What do you mean transferable?
Well, is the new owner responsible for, if the bill was in the name of the tenant?
Yeah.
And metered
I think it
separately?
depends. There's, I think, a landlord-tenant cooperation act in Philadelphia that if you're a landlord, you have to sign up for it, right? If you sign up for this program, generally the bills are not going to be a lien that has to be paid from the landlord themselves.
Okay, I didn't know that.
Yeah.
Timothy, did you know that?
Yeah.
You knew that?
Yeah.
Okay.
And it's actually litigation going on now. There's litigation going on. I don't know the status of the case, but there's a case going on where landlords had sued the city regarding that, and it's been back and forth. I forget, it's on appeal now, so I'm not sure what the status is, but there's something called, I think it's a Landlord-Tenant Cooperation Act, something like that. You sign up for it if you're a landlord, and you're protected against bills from a tenant.
Is that Philadelphia only?
Philadelphia only.
The counties?
Philadelphia only, from my experience. Counties, you're stuck.
Okay.
Yep. Philadelphia, though, yes, you can sign up for that. Yep. Yep. Fraud, huge area, obviously, just in general. So we protect against that on an owner's policy. Fraud, meaning, there's a lot of issues, again, in Philadelphia, unfortunately. We get a lot of.
Can I go back to that previous question
Yeah.
about the notary signing something that the signator was not present?
Yeah.
Does the notary have any responsibility for that?
I mean, they certainly could, sure. Yeah, I would assume they'd lose their license, but I don't know. Beyond that, I don't know what repercussions.
Can they be sued for that, Beth?
Yeah, the problem is, yes, a notary is supposed to have the person in the room.
Yeah.
Their license requires that they do. The problem is there are a ton of notaries that will do, quote, favors for people, and they notarize when the person's not in the room.
But
Now, they should be liable for that, but here's the problem.
Do they
What
have
if they-
insurance? Do they have cover?
What if they have no money?
Right. How are they going to pay you? You know what I mean?
Yeah.
The notary's not carrying much.
notary doesn't carry any liability insurance.
They can, but they're not. They may not.
Yeah.
You know what I mean?
Well, no, I didn't.
And what if,
Yeah, it's- I
and the
mean,
problem is
They may
that
or may not carry it. So
the fact that the notary did this intentionally can void any insurance
Yeah.
that they have.
yeah.
Oh. So they
Right.
can intentionally, okay.
Yeah, because
all
if
right.
they did it as a favor, they knew the
Yeah.
person wasn't in the room.
Yep.
So if they intentionally commit a crime, they void their insurance, which means they're
I'm
untouchable.
sure most insurance policies say if you don't comply with your license,
Sure.
we don't have to insure you.
So they're
'cause they wanna-
untouchable in that
Yeah.
case.
But like,
So-
for example, so as a title agency along those lines, I have errors and omissions insurance that cover me if I miss something.
Yeah.
But if I'm breaking the law, they're not going to cover me. You know what I mean? So it would be accepted probably from coverage. So
I wanted
What
to
crimes have you committed lately, Gary?
nothing that I really talk about. So, what would you change your comments at all when it comes to condominium associations? Because it's a partnership between
Right.
you and a nonprofit corporation.
right.
So I'm just wondering, is there anything of the things that you've covered that you might need to modify because you have a property with
I mean,
an HOA?
not as far as the stuff I've gotten into so far. No, there's a couple things I'll touch on as far as like maybe some different kind of policies that I don't think you need with a condo, but nothing that I've said so far.
Let me follow up.
Sure.
So when you do a search on an HOA, on a condominium, and I'm the buyer and you're searching my interest,
Yep.
which is usually the inside, but the unit, but the outside, which is owned by the corporation, are you doing a search on their interest
No, just the unit.
at all?
Just the unit.
So I could be buying a condominium that has liens, so to speak, on the outside portion of my property.
Could. Yeah, but it's on the association. I mean, if it's on the association, it probably wouldn't affect you, but yeah.
Well, wait, I think it would affect you.
Not on your individual
If you wanted to
unit.
go resell it, right? There's essentially a lien on the property as a whole. I think that's your point. And actually, that's a question I've never considered. How does the condominium association, because there are a lot of condominium associations that are not exactly how do I want to say this politely? Well, I was not thinking small and large. I was thinking about not keeping up with their responsibilities. And they owe tons of money.
Yeah.
And don't the owners share in that risk?
Well, they share, I guess, in the common elements, but I don't know if I don't know if something the association didn't pay would affect the common elements. I've never had that issue, but.
But I, as the owner with the corporation, that corporation has the authority
But
typically.
you're a shareholder, aren't you, essentially?
I am a member of the corporation, for example.
Yeah.
And the corporation typically has the ability to make special assessments for things that they may need done,
Yeah.
and or to borrow money and take loans out, which in turn have to be paid back by the members of the corporation.
Right.
Yeah, I mean, the only thing I can think of is I don't even know if the condo had a lien against it, if it would even be a lien on the common elements. I don't know. It may not be, you know what I mean? It may just not even be a lien, but we don't search them. We just search that individual unit. Owner's coverage is optional.
I'm sorry,
Yeah.
just to go back to Gary's
Yeah.
question. If you were asked to search on it,
Yeah.
could you?
The common elements?
Right. If Gary came to you and said, I'm buying condominium at ABC Main Street or 123 Main Street, and
We would probably just have to search the association itself.
yes, that's
Yeah.
right.
You could run judgments against it to see if something comes up. Sure.
Right, but he would have to ask you for that.
Yes, correct.
So,
Yes.
okay.
Yes.
The average buyer may not ask you.
Correct.
Would you suggest it to a buyer?
No. No, because again, I'm covering them. You know what I mean? So it's not an issue on my end. I mean, that's like them saying to me, you know, they want a neighbor's property, sir. You know what I mean? I'm only concerned about my unit or my property. If they want something additionally searched, they can ask,
But I
but it's
think
not
that-
something we normally do.
Okay, it sounds to me like it still could affect the authenticity of that property or the cleanness of that property.
Could be, but I mean, I'm insuring that unit.
Okay,
That's the other issue too, is I'm insuring the unit, not necessarily the common elements or their right to use the common elements, right? So I'm not ensuring that they can use a walkway necessarily, maybe in that development. I'm just insuring that individual unit.
except that if it affects their ability to resell it.
Would it though? Because again, I'm insuring it, so I would assume another title company would insure it the same way I would.
It would, according to what Gary just said.
Well, from his viewpoint, but not from me from a title end. You know?
Well, I'm asking from a title end because there was a case.
Like I'm insuring that unit, right? That individual
Well,
unit.
the unit is part of a whole.
Correct. But it's a fee simple, that unit. And they have a right to use common elements, but I'm not insuring those common elements necessarily. I'm just insuring that individual unit.
But
Yeah.
like Gary pointed out, if the condominium association owes $100,000 for some reason or another, and now they have to go borrow money, right, to repay that $100,000, aren't the members of the association liable for that $100,000?
Could
Yes.
be, sure.
Yes.
Yeah, but that's nothing we insure against necessarily. Yeah, we don't insure against that though. I mean, we don't insure that their dues may go up or that, you know, as a member of that condo, they're going to owe more. And when they buy a property from a condo, there's going to be like a resale package done that they're going to get as a buyer. So they'll have all the information on the association as far as the budget, the numbers. It's really up to the buyer to look at that and see if they have any concerns.
Okay.
Go ahead. Go ahead.
No, I was just going to say that a condo, I mean, there's lots of issues with condos. And if you're going to buy a condo, you better make sure that you know the issues before you buy it. Because if any one of the condo owners in a particular condo, for example, doesn't pay real estate taxes, you're going to have a real estate tax lien against the whole entire
Right.
condominium. Title insurance companies are not selling all, I mean,
Right.
are not searching all the
Mhm.
real estate taxes against all the, so
Right.
you have to know those issues and
Yeah.
be willing to take that risk.
Yeah.
Personally, I wouldn't take that risk ever, but other people do all the time. So you just have to understand the issues and know what you're getting and what you're not getting.
So here's an even more strange question.
Right.
How about a timeshare?
I don't insure timeshares. That's
The poor guy.
we don't issue title on timeshares, so
That's a whole other.
I don't. That's a whole. That's a whole
lecture.
another issue that we don't do. And it's funny. Somebody asked me about it, and I'm like, I don't do it. There are some companies that do it for properties within the United States. We don't. There's very few that actually do it.
Okay.
But yeah, I don't.
You got out of that one easy.
I don't touch them. If anybody else wants to jump in on that one, but I don't. We don't touch them.
Even
But,
the expert's waving his hand.
yeah,
just
we-
for the record.
we don't touch them. I was saying owner's coverage is optional. In 20 years, I've had 2 people waive it, meaning you don't have to get it when you're buying a piece of property. You don't have to get owner's coverage, even if you're getting a mortgage on it. Why people would waive it, I don't know. I'll get into the cost a little bit. The cost is minimal, but it is optional. If you do waive it, most title companies are going to have you sign a waiver saying that you declined coverage, so at least we have it in our file. It does happen sometimes. And the cost of it is generally based upon the sales price for owner's coverage. I'll get into a little bit more detail, but generally the purchase price of the property is what you're going to be paying the title insurance on. And State of Pennsylvania basically sets forth, it's called TURBOP, it's called the Title Insurance Rating Bureau of Pennsylvania. They set forth all the rates. It's pretty much standard all across Pennsylvania what the rates are, no matter which title company you're going to go to or title agency you're going to go to. And the premium generally increases per $1,000. So it's a fairly straightforward calculation. I'll get into it in a little bit. Owner coverage risks. These are generally what's going to be listed in a policy when you get it, owner's coverage. And I'll kind of go through them quick. I mean, I'm sure there's been a ton of litigation on these issues. I don't want to get too crazy on some of the nuances, but these are kind of the general areas that you are covered on an owner's policy, okay? And I kind of mentioned them before, title being vested other than as stated. You know, obviously if somebody else owns it or has an interest in it, we're covering you for that. You know, any defect from forgery, fraud, again, powers of attorney or fraudulent deeds, which do happen, unfortunately. There's been a lot of issues. I think I started to talk about it. In Philadelphia, we get a lot of bulletins from our underwriters about fraudulent deeds. There appears to be some sort of epidemic down there with people impersonating people. We've seen it where, you know, we get a deal or somebody proposes a deal with us where someone is selling a piece of property for, say, $100,000. We do a title search and find out that they got the property 3 months ago for $5,000. And it's a vacant piece of land. And you kind of look at it and you say to yourself, they got it for $5,000. Now they're selling it a couple months later for $100,000. Something sounds a little bit odd about it. And what our underwriters will tell us to do is to go back to that first deed, that $5,000 deed. Some people are shaking their heads, find out who that person is, meet them, check their ID, find out what's going on. And a lot of times when we ask that, no one ever calls us back regarding that file. And again, getting back to you, Don, those deeds are notarized and recorded. I don't know how. We see it a lot. And I guess what our underwriters are concerned about is people are looking for properties in Philadelphia in particular that are vacant lands. Maybe somebody has owned it for a very long time. Maybe that person is alive or isn't. Somehow they impersonate that person. They sell it to somebody. You're happy to get it. You're getting a great deal. Maybe that first buyer knows what's going on. Maybe they don't. I don't know. But they're happy to get a good deal. I'm getting this property for $5,000. You're getting it from somebody that doesn't actually own it. So fraud is a big issue in title insurance.
So how do you actually catch the fraud?
Well, like I said, what we do is, you know, we, like on that one, when we see a deed for maybe a small amount, then all of a sudden a few months later for a large amount, we're going to ask to go back to that first deed, say that one for $5,000, and verify who is the person that signed that deed. Who's that grantor that signed it? I'm going to want to see ID. I'm going to want to see a birth certificate. Who are they? And generally, when we ask for that, no one calls us back about that file. So I've never actually done it where that person has appeared. Let's put it that way. But yeah, we'll be asked to just look at all the deeds and try to verify the IDs of everybody and what's going on. You know?
So if nobody calls you back, will you insure it or will you not insure
No, we won't touch it. And then I'll just report it to my underwriter and say, hey, somebody called on this, and you know, they may, who knows, they may put it on a list of properties or who knows.
Do you report that to the recorder of deeds so that there's a note on the file?
I mean, I don't. Unless I know there's fraud or something, I don't report it to the recorder of deeds, no.
So the next party may have the same situation, but not have a good title search guy like you.
Well, I mean, they could. I don't know. They could.
And that's why.
Yeah. That's why, right? You get title. I mean, you go to a good company. And most people would pick up probably something like that where there's a big disparity in price or something just looks off a little bit. But it does happen. We've had people, it hasn't happened to me in particular, but there's been girls in my office where they do a closing and somebody shows up and actually has fake ID. We've caught that a couple of times over the years, where someone who's purported being a seller, he almost gets to the table. One of my girls had to happen to her a couple of years ago, not at my company, but somewhere else. She was doing a closing. We verify everybody's ID when we get there. And she thought there was something weird about the ID. I think she asked for another form or two, and the seller ran away. So it does happen that people, that happens all the time, that people try to impersonate people.
Literally ran out of the office?
Literally. She said the person ran. It was a woman, and she said she literally ran out of the office. And I think they called the police, reported, but I don't know exactly what happened with it down the road. But crazy things do happen, you know. Again, you're covered for unmarketable title, no right of access to and from the land, violation of any law, ordinance, permit, or regulation, but generally only if recorded. title doesn't really ever insure against a zoning violation along those lines, but if it is recorded, you may have coverage on your policy. Same thing, eminent domain is generally covered, but only if there's notice recorded in the public records. And you'll kind of see that as a theme throughout this, that we cover you for something that is recorded and that we may have missed in the county when we do a search. But if there's something that maybe isn't recorded, you're not always covered for that, okay? And I'll touch base on that a little bit.
Well, as we talked earlier today, there are situations, especially after the 2008-9 situation, where banks were sold to banks, were sold to banks, were sold to banks, and the paperwork got lost along the way. Yeah. So it doesn't necessarily appear in the official record. What happens then?
With what in particular? What do you mean about bank disappearing?
No, not the bank disappearing, but the records don't follow all the way through.
Oh, you mean so even if there's documents missing from the county that aren't there when I go to do a search?
So there's a legitimate...
It would probably depend on the type of record as far as whether I would give you coverage for it. So say if it's maybe an easement or something like that, you'd probably be covered under your policy. But if it's maybe a zoning issue, you wouldn't be covered. Yeah, go ahead.
I think perhaps he was referring to when mortgages are being bought by multiple companies
transferred,
and they're not showing as satisfied as they
do. That's Chuck can talk to that. We spend 90% of our time clearing old mortgages. So I'll touch on it now. So what happens is if we do a search, we're pulling up mortgages and judgments on a piece of property. Again, we go back that 60 years generally. And most of our job is spent clearing them up, even if they're paid. And we have various resources to do it. But generally what we're looking for is a satisfaction piece to satisfy that mortgage of record in the county. And a good piece of information for you guys, if you're ever selling a piece of property, I always tell people, when you sell, make sure your lender is sending you proof that the mortgage is paid. They often don't. I always give people my card at closing and say, if you get a satisfaction piece, call me and I can record it. Because it would save all of us a lot of time as far as clearing up old mortgages and judgments.
If you have a situation where you can't get a hold, you never got a satisfaction, and you can't get a hold of the lender, you sometimes would have to hire an attorney to clear the title, okay, which can be a big pain in the neck if there is no lender because they went out of business. Yeah. So all the more reason to get a satisfaction if you're paid. It's
what my girls spend half their time doing is tracking down mortgages. And it's fun when they're from 1970 and it's been transferred a million times with the lender's out of business. And there's websites you can go to where you can kind of always find out hopefully who that lender was that eventually held it and we can contact them. But yeah, I've had situations where nightmarish. There's no one. Yeah. It's nightmarish. You have to go file it. Right. Yeah. Like a quiet title or something. And it's horrible. It's horrible. Yep. And I'll get into some stuff too as far as selling properties, what to look out for, because there's so many crazy things that happen. Yes, if you're selling a property and you're paying a mortgage off, make sure your lender sends you proof, please. We can record it in the county and take care of it for you. So, and make sure your mortgage is paid off. Most title companies, if they're paying off a mortgage, they may wire it. They may send a check. 90% of ours are wires. So if we're paying off lenders, we're doing wiring. We have software that we pay for, that tracks our fundings and our wiring. And I get alerts every day to my email if a wire wouldn't or wasn't sent on time, which is a good thing. But not every title company has that. I've heard of situations where a title company pays off a mortgage, Wells Fargo, they send out a check maybe instead of wiring. Maybe they send it out late. Maybe the check gets lost. And the seller finds out maybe 30 days later that they're late on their mortgage and it's on their credit. That's a huge issue. So I always tell people, if you're selling, make sure everything that is supposed to be paid is paid. Your title company should be able to send you proof of the wire or how they're sending a payoff out. So I always tell people that too, because it happens all the time. Because title companies, a lot of them are busy. They may forget they may send a payoff out late. They may send it by check. I've seen instances where UPS loses a check that's going to Wells Fargo. No one knows. And, until a seller calls panicking that their mortgage isn't paid off. A lot of times the title agency will obviously cover it and pay it, right? Because it's their fault, but it may affect your credit. And that's a big issue. Lenders policies, I talked about owners policies. Lenders policies are fairly straightforward, generally the premium is based on the loan amount, okay? You can modify a policy. I've done that a lot in the commercial context. So if there's a mortgage on a property for $100,000, some lenders modify it to maybe change a rate or increase the loan amount. They can get additional coverage on that modification. Generally, what is insured on a lender? Obviously, the lender wants to know they're insured that they have a lien on that property in whatever position they think they're on that property. So if they think they're the first mortgage on that property, they want to be ensured that they're in first position if, God forbid, they have to foreclose. Exclusions from owner's coverage. I talked about this a little bit, and I was talking about before. You're generally not covered for like zoning violations, eminent domains, things like that that are not filed in the public records. We don't really insure against zoning issues. That's kind of up to you to figure out. If it was in the public records, we'd insure against this, but if it's not in the public records, we generally wouldn't. Defects, liens, encumbrances, anything assumed or agreed to. So anything maybe you know about, we're not going to cover you for. If you somehow agreed to some easement or something like that, we're obviously not going to cover you for something you know about or something that you created. Leasehold policy I talked about. As I was saying, it's used a lot in commercial real estate, where there is a lease on a property, say for a Home Depot or something along those lines, or a tenant in a strip mall or something like that. So we can do a policy for either a lender, someone that lends money to a lessee, which does happen in a commercial end, or someone that is leasing a property. We can actually insure their interest in that lease through title insurance. Not many people know about it. We do it. Again, commercial contact. It's pretty weird. The premium calculation gives you a headache sometimes. We have what's called, it's a rate manual, which tells us as title agencies how we're supposed to calculate all our charges. And there's just a ton of different ways, certainly call me if you have questions on it, but there's a ton of different ways to calculate the premium on that. It could be based upon the total rental payments. There's a ton of different ways to calculate what the title premium would be on a leasehold policy. Mechanics lien coverage I wanted to talk about, because that's an area we get a lot of calls on. Back in 2008, when the crash happened, when I was doing title back then, we would often give mechanics lien coverage, which is coverage for a contractor that did work on a piece of property. We would often give it to an owner, somebody buying a piece of property. Nowadays, you're never, hardly ever, getting mechanics lien coverage if you're buying a property that had recent construction on it. No one knows that. People think we're giving them coverage. Go ahead, Don, you have a question already? Or?
Well, you said no one gets it or no one knows to ask for it?
Both. No one really ever asks us for it.
But wouldn't it show up in your search?
No, that's the problem. That's the problem with mechanics lien. So if you're
tell us about that.
Yeah, so if you're getting a house built by Toll Brothers, just give you an example. You buy a house on such and such date. They may not pay, maybe they don't pay their contractors. And this was an issue in 2008 when a lot of builders went under. They didn't pay their contractors. And that's kind of how this all changed. There may not be a lien filed anywhere in the county when you're buying that house that I pick up. I don't know the specifics of the mechanic liens law. I think they have up to, is it 6 months now? I don't know the time frame actually, that a contractor who wasn't paid can file a lien and it goes back in time to when they were doing the work. So say, for example, you buy a house today, right, from Toll. They don't pay Joe Smith plumber, right, whatever his bill is, $10,000. The plumber next week goes and files a mechanics lien. It would go back in time ahead of when you bought the property. It would be a lien prior to when you bought it. I'm not covering you for it because of all the issues we used to have with builders going out of business, and you're on the hook for it.
So is this mostly for new construction?
New construction, yes. So if I find out something is new construction, we go, uh-oh. Again, what I try to do is tell people, hey, you're not getting mechanics lien coverage. If you want it, let me know. And then what I have to do is, it's a fairly long process, is I almost have to find out who every contractor was, make sure they're paid, and kind of go through everything before my underwriter may say to me, hey, Andy, you can give coverage, mechanics lien coverage to an owner buying a property that's new construction. So it's a big issue. I wanted to point it out because most people buying property don't know that they're not automatically getting mechanics. It's a huge issue. A huge issue. Especially if, again, if it's a notable builder, you probably feel comfortable if it's Toll Brothers. But if it's maybe a builder, I don't know, if it's a builder that's new or maybe you don't know much about, are they paying their contractors? I think it's a big issue for somebody buying a piece of property. For lenders, we usually give coverage. So if you're lending money, you will usually get it because a purchase money mortgage, which is a mortgage you're getting out when you buy the house, usually has priority over mechanics liens. But for an owner, you're not getting coverage. So it's a big issue that we always try to point out to people. And every underwriter is different. I mean, mine normally don't want to give it. I don't know if yours are any different, Chuck, but mine, they don't want to touch it normally. And they'll even tell me, don't even ask. A lot of times they'll say, don't even ask to give mechanics lien coverage for an owner. We don't even want to look at it. So that's how complicated it is sometimes. But I think it's an important issue I wanted to point out to somebody buying a piece of property. Costs of title. Most people tell me it's generally the same. It kind of is. It's regulated by TURBOP, which is the Title Insurance Rating Bureau of Pennsylvania. It's a group that gets together with basically the underwriters in Pennsylvania, and they come up with the rates that we charge. And again, the rates generally vary, either based on if you're buying a house, it's going to be based on the sales price. If you're refinancing, it's going to be generally based on the loan amount as far as the coverage. It changes generally per $1,000, and there's basically just a simple chart for it. There's kind of two rates now in Pennsylvania, a sell rate or non-sell rate. Sell rate is obviously if you're buying the house, that's the rate you're going to be charged. The non-sell rate is if you're refinancing, you're going to be charged the non-sale rate. And again, they're just two different premium calculations based upon the coverage amount. It does vary state to state, so title premiums are all over around the country. Some are high, some are low. So if you're buying in different states, find out, what that state charges. Florida, for example, sometimes the seller pays the title insurance. That's different. Nobody knows about that around here. So depending on what state you're actually doing business in, it varies.
There's a question back there. Use the mic, please.
Yeah, go ahead. I didn't see it. Sorry.
Sorry, my mind is going back to the mechanics lien real quick.
Yeah.
Let's say, I don't like to stand.
Yeah.
Let's say that, like a lot of times now with my contractors, I have a mechanics lien waiver included in that.
Mm-hmm.
And if I have that signed off on for them or their subs, and all of a sudden I pop up, 6 months, a year, whatever later, with the lien from one of those, can the title company use that waiver that I had signed off on the?
Yeah, generally no. We've tried. They don't generally want that. They almost want proof from that contractor that they've been paid. So generally, no, from my end. They'll want us to independently confirm each contractor's actually been paid and probably have something signed by my underwriter to confirm that before they would even touch it. So,
thank you.
Yeah. If you're buying a house and getting a mortgage on it, you're paying one premium amount. You're really not paying two. You're paying one premium amount, generally based upon the higher amount, higher of the purchase price or the loan amount. So you're not paying for two premiums if you're getting a owner's coverage and lender's coverage. Generally treated as a single policy at the highest rate is what is charged. Okay. So that's when I was talking about some people saying they don't want an owner's policy. It does happen once in a blue moon. If they're buying a house for $200 and getting a mortgage on it for $170, they're already paying title on the $170 no matter what, because that lender is going to want coverage. And the difference to increase it to $200 is minimal, a couple $100 maybe. So there's really almost no reason to get owner's coverage. An interesting thing too, if you're buying a piece of property, you can postpone owner's coverage. I've done it a lot. You can postpone it, meaning you don't have to pay for it right away. You can wait until you get a mortgage on the property. If you do it, I think it's within 6 months. Then I can issue both policies at the same time. So it kind of saves you some money. You're not paying for an owner's, then paying for a lender's down the road. Standard versus enhanced for an owner. It's something it's kind of I don't want to say it's a hot issue, but people talk about it a lot. Go ahead. Yeah.
I had a question about the last thing you said about postponing buying the owner's policy.
Yep.
To do that, you have to be using the same title company for both.
Correct. Yeah. Okay. Generally, yes. Yep. I haven't seen it where you can go. Yeah, it would have to be the same company. Standard versus enhanced. Been a lot of interest in this. A lot of realtors ask us about it in Pennsylvania. You're buying a residential property and you're going to live there. You can get a standard policy or an enhanced. The standard is the one that's used most. We use it most of the time. I think it's a 2006 policy. But you can get an enhanced. And what it does is it gives you additional coverage. I actually have handouts I can give you guys that goes into a little more detail as far as the extra coverage on there. But there's something like 20 to 30 areas of extra coverage on the enhanced. If you look, I kind of touched on some of the things that are covered. So some things that aren't covered on the standard that the enhanced gives you for zoning, subdivision law violations, look, improvements that may encroach into an easement, kind of some technical stuff there, building permit violations, all that kind of stuff is covered in an enhanced that wouldn't be covered in an owner's. The cost is generally only 10% more than a standard policy, so it's not a huge difference. People call us and say, what should I get? It's kind of hard. I can't really give them legal advice as a title agency, but we kind of give them a handout kind of showing the difference between the standard and enhanced, and it's up to them to choose. Someone had mentioned, I know you were talking about, we talked about condos a lot. I always tell people if you're buying a condo or something like that, you probably don't need the enhanced. You know what I mean? You're not going to have necessarily an encroachment or something like that. You're not buying land itself. You're just buying that unit. So I'd say you probably don't need it. But if you're buying a piece of land and maybe you have a concern about something, I don't know, an easement, an encroachment, I don't know, maybe it pays to buy the enhanced policy. So that is something that is out there that is offered to people buying houses, residential, where they're going to be living there. Closing protection letter. I know, Don, you had mentioned that to me. People were kind of like, what is that? It's called a closing protection letter, or CPL. You'll see a charge normally on your HUD or closing statement for it. It's $125 in Pennsylvania. And it basically says that me as a title agent, I'm going to make sure I follow any instructions from a lender, and I'm going to make sure I don't mess around with the money when I'm doing a deal involving a lender on a piece of property. So again, it's kind of like coverage we give to a lender. And it's issued from my underwriter saying that, hey, Abstract One is going to make sure they handle the money right way, and they're going to follow your closing instructions. If they don't, you can rely on this letter and file a claim. So that's kind of what a closing protection letter is. Since I mentioned that, I'll kind of talk about fees again. The fees are generally set, like I was saying, as far as your title premium in Pennsylvania. You're going to be charged a CPL if you are dealing with a lender. There's some other fees you may see on a settlement statement from a title company that are optional. There may be a closing fee, or a courier fee, a wire fee. There's additional things we can charge for that are, I look at it as optional on my end. So if you're going to closing, just see what your title agency is charging you, and you call them if you have a question on a fee. Do they have to charge this fee? Can this fee be waived? Not everything has to be charged, let's put it that way. I think the biggest thing is a settlement fee. Some companies charge $0, some companies charge $500. I don't have to charge one. I can, but I don't have to. So that's something to look out for too if you're buying.
Does that fee go to you, or does it go to the insurance company?
It would go to me.
Okay, so you're insuring, you're getting paid to insure your reliability, essentially.
Well, the CPL goes to my underwriter, but the closing fee that I was just talking about would go to me.
The $125?
Yeah, that goes to my underwriter.
Oh, okay.
Yeah. But the closing fee would go to me, and that's an optional fee that some people charge outrageous ones, but it's an optional fee. So I always tell people, look at your settlement sheet, see what you're being charged. Call your title company if you have questions. Reading the title commitment. We talked about reading, Beth, and looking at things. No one looks at title commitments. I see it only really in a commercial context where the buyer is buying a significant piece of real estate. They have an attorney. The bank has their own attorney. They're looking at my title commitment. So the title commitment is what I prepare when I do my 60-year search. We put a commitment together that basically shows everything that we have to kind of clear on one hand before we can issue title. And it shows everything that's on title, meaning any mortgages, any judgments, inheritance taxes, any issues that may affect that title. I always tell people, look at it. People rarely do. I think the biggest thing I had talked to you about, Don, in the beginning was look for your exceptions. So on the Schedule B2 on your title commitment, it's kind of the last page, it'll show any kind of easements, rights of way, encroachments, anything like that that affects your property. Your title company can give you copies of those. Again, hardly anybody ever asks us for them. We usually send them out to people. Go ahead, Don.
Give us some horror story examples.
So even a simple one, just one we were talking about, which I've seen with people, is if you're buying a piece of property, it could have somebody I know just had their house abutted onto a road. There was a setback that was filed that was on the title commitment of like 20 feet from the road. The person buying it was planning to put a fence up, and they couldn't because of the setback. and they had no idea. So that's just something you would know if you actually got your title commitment, looked at the B2, and asked for copies of the exceptions. So I tell people, if you're thinking of doing anything with the property, well, first of all, look at it anyway. But if you're planning on putting a pool in or putting a deck on or doing anything, get copies of the exceptions and look at them. You're paying for it. It's all included kind of in that title premium. So look at what you're getting. And if you don't hire Beth and hire somebody else, make sure your attorney's looking at it. Because I cannot tell you the amount of times I do closings for people. I did a commercial closing for $2 million with somebody who was buying a Starbucks. And the attorney for the buyer never asked for the commitment or marked up title, which I found unbelievable. So that, we had to volunteer it, in other words, and give it to the buyer. And I actually had to call him to tell him to look at it. So he was being represented by counsel. He was paying a lot of money. His attorney didn't look at the title, didn't ask for exceptions. So the person buying it really had no guidance on what was affecting that property, which is scary. Okay. Yeah.
Go ahead. Yes.
Go ahead. No, I can hear you. Go ahead.
How often do you automatically provide someone with an explanation of what the exceptions are? Because we actually do look at our title, but the way it's coded, we had to go back and ask. So is it customary to provide?
Well, I would say from a title end, I can't give you advice on what an exception legally could mean to you. You know what I mean? I can provide it to you and say this affects your title, but I would tell you to hire an attorney to maybe explain to you what that easement restriction, whatever it could be, means to you and how it affects the title to that property.
Okay, because it's not even written out in English. It's almost like you have to decode it, like E120.5. Is that's the standard way you give it, or do I need to talk to my title company?
Yeah, I was going to say, is it actually something?
I think the one for ours, once we finished asking questions, it was just, it's in Philadelphia, in Center City, and you had to have your porch built so far back so there could be a sidewalk. So it ended up being harmless, but if it would have just stated that, it would have been easier.
Right.
It was like a code.
Huh.
So,
I'd have to see it, but generally I would probably tell somebody, here it is, this is affecting your title, talk to an attorney if you want legal advice. That's what I would say, to be safe.
It sounds like what you were seeing was the ordinance that was being violated. And that's the thing. And that's why you have to have an attorney. Because if it says the ordinance, you got to look up like when I read a title, and I'm sure you got to look up the ordinance and see what it is and if it's a problem. And how are you going to do that if you're not an attorney?
Can't you Google the ordinance number and have it come up?
First of all, how do you know to trust Google?
Don't you trust Google?
That is heresy.
In Google we live.
Anthony?
Gary?
I put properties into trust.
Mm-hmm.
So I was wondering if you have any comments about that, number one. Number two is the trusts have trustees who do not have, they're the managers of the trust typically.
Yeah.
But if you're going out for a mortgage and you have two trustees listed on the trust, the bank might do a search with the prothonotary of courts to see if there are any judgments, against the trustees. Does any of that affect title insurance as far as?
Well, we would likely run a search against the trust. I guess it depends. Is the property deeded into a trust?
The property would be deeded into the trust.
Yeah, so we would probably run the name or whatever that trust name is, and probably the individual trustees to see if there's something filed against them as trustee. If it's not filed against trustee, it would really depend, kind of a file by file, but I would think if it's not filed against them as trustee, it may not affect title. Unless it was something that was against them, like did they own it individually before they transferred it to a trust? Yeah, okay. Yeah.
So I want to comment on the trust situation. Yeah. I do not claim to be an expert. I am not an attorney. All the caveats therein. But I recently did a situation where I was going to lend money to a trust who allegedly was going to buy a property for a flip. And what I learned was that the trustees can be changed much faster than I can send out a subpoena.
Sure. Yeah.
So as a lender, I'm basically lending money to an unknown entity or potentially unknown entity. That's not a good thing.
I think the biggest thing I see with trust sometimes is, if a property is put in a trust or there's one on title and, the trustee, whoever formed it, passes away, there's oftentimes inheritance taxes due. A lot of times people don't think it's due. You call the state of Pennsylvania, whether it's a revocable trust or irrevocable, if you call them about if somebody dies, is there inheritance tax? They'll tell you yes. A lot of people don't know that. I think they're told by their attorneys, just put it into trust. It'll avoid probate, it'll avoid everything. It doesn't avoid everything.
Right.
So
It avoids probate. It does not avoid taxation.
Correctamundo, exactly. And nobody gets that. And so we often have problems trying to explain that to people that, hey, you may owe inheritance tax on it. They're arguing with us going, my attorney told me, blah, blah, blah. It doesn't, it doesn't go into probate. I'm like, exactly. But so we just refer them to inheritance tax to call them. And
so relative, Don, to what you're raising, a trust, if it has assets like Elvis Presley's, estate is a trust, and it has assets. The trustees could go out and borrow against those assets. But I think, okay, as the trustee of a property in a trust, the bank or anyone else who wants to borrow money, if they're smart enough, they're going to ask for a personal loan from me.
Yes, if they're smart enough.
So again, look at your title commitment, please. See what's on there. When you go to closing, that title commitment is going to be marked up, is what it's called. And whoever's doing the closing is going to write on there generally remove or accepted. And you'll see that on it. And when they write remove, that means they're covering you for whatever's on there. So if I'm paying off a mortgage at closing on a property you're buying, I'm going to write remove next to it. Remove, paid at closing. So you know you're being covered for that mortgage, that it's going to be paid by my office. If something is accepted, and I'll get to some of the standard ones, you're not being covered for it. So look at your marked up at closing, because you may have something that is accepted that maybe you're not aware of or don't know about or don't want to accept it. Title commitment has a couple parts. Schedule A is generally the front of the title commitment. It basically lists who owns the property now, who I'm going to be issuing a policy to. I always tell people, look at it, check spellings of names, all that good stuff. I cannot tell you the amount of times we do corrective deeds because people don't tell us whether their name is spelled correctly or not. So look at the Schedule A just to find out, the amount of insurance we're giving you. Make sure all the names are spelled correctly. It'll list the property address as well. Schedule B1 has a lot of requirements. So basically it's going to be telling me what I have to do as a title agency to clear up and insure that title. So it's going to show stuff like mortgages, judgments, taxes, water, sewer, all that kind of stuff. And again, as a title agency, we want to make sure that anything that is lienable is paid at closing, meaning any kind of water, real estate tax bill, anything that can be liened is paid at closing. If you have an electric bill and it's not lienable, I don't care about it. People think we take care of that. If there's a Comcast bill, I don't care about that. It's not lienable. You know what I mean? There would be a judgment filed. So sometimes people get confused by that. We only care about municipal bills that are lienable. And we run a search for that as far as taxes, water, sewer, etc. All that will be listed on the B1. And again, take a look at it. Find out what's going on with the property. Schedule B2, I always find interesting. So this is kind of the end of the title commitment. And these are the parts that are generally removed or accepted. So when your title clerk is writing that on there, it's basically stating what you're covered for and what you're not covered for on your policy. So if you look at the first one, you'll see, and these are generally standard. Some agencies may have different ones. Some underwriters may have some different wording or different ones, but these are the ones we use. You look at number 1, rights or claims of parties in possession not shown by public records. Basically what that means is if you're living in the property, it's owner occupied, I'm going to remove it. So I'm covering you for that. If you're renting it to somebody, I'm going to generally accept that because I'm not covering you for any kind of claims or issues you could have from a tenant because you're renting it. An interesting one that nobody really knows about, number 2, is kind of the survey exception. Generally, in PA, if you're buying a piece of property, I am not covering you for something that would be found on a survey. Nobody really knows about that. We can give it to you, but we're going to ask you for a survey because we're going to want to know that you went out and did it, and I'm going to know what may show up on that survey. So again, you're normally not getting survey coverage, go ahead, in Pennsylvania for an owner. Yeah, well, the survey endorsement generally is for a lender. There is an owner's, But my underwriter is going to tell me, Andy, if you'd issue it, get a survey.
Some title companies won't even.
Use the mic, please,
Yeah.
Beth.
Go ahead.
Some title companies won't even give an owner the survey exception with a
Well,
survey.
I think that's crazy, but yeah.
I've had them say no, even with the survey.
Yeah, I mean, I'm used to reading them from doing commercial stuff, so it's not, yeah. So generally, you're not getting covered by that. I always tell people as an attorney, even, if you're buying a piece of property and it's a piece of land, fairly large, get a survey done. The amount of headaches it could probably save you are huge, because you're just not going to know what's out there. Fence lines move all the time. We had a client that he was buying a property, I think it was in Bensalem. I told him to get a survey. He got one done. He found out his neighbor's fence was 4 feet over onto his property. So he never would have known that if he got a survey, and I would not have necessarily covered him for that. So I always tell people, get a survey. It's worth the cost, whatever it is. I mean, if you're buying new construction, again, from Toll or somebody, you probably, there's probably been a recent one you could probably get a copy of and know that you're okay. But maybe if you're buying an older property with a big piece of land that's been around a long time, get a survey and save you a lot of headaches. The third one is the mechanics lien that we don't cover for. Again, we're not going to cover it for you if you're buying a property. We'll probably give coverage to a lender, but not for you. The fourth one is generally removed. What that basically means is, I was talking to Don a little bit about that before I was talking today. You're generally insured from the date of closing is when I insure you, or when you close. But we're also going to cover you until that mortgage or deed is recorded. So if something, God forbid, goes on record, which does happen, if you close today and I don't record for a week, if something gets filed against that property or the prior owner in that week, you're generally going to be covered for that. That's why most title agencies, and find out what your title agency does, by the way, how quickly they record stuff. So obviously it can help you if you're buying a property, they record it as quick as possible. I'm sure Chuck does. We record e-recording, most counties of Pennsylvania, both. Yeah, right, and that's the issue. So we can e-record in most counties of Pennsylvania, meaning I can sit at my desk, I scan a deed and mortgage, I send it to the county, it gets e-recorded. It's a miracle. It's a godsend compared to how it used to be. Delaware County, from my experience, about 3 or 4 months. And every time we send them out, we panic because if that mortgage or deed gets lost, I'm on the hook. So it's a huge issue, Delaware County. Big issue. And we have stuff hand delivered there, and it still takes 3 or 4 months to get recorded.
So in Bucks County, when you file,
yes.
You get file electronically.
Yes.
You get an electronic receipt.
Correct. Yes.
Saying that it was received. Yep. Is having it received different than having it recorded?
I would say yes. Yeah. Yeah.
Oh my goodness! Yeah. I didn't know that.
But usually in Bucks, it's pretty quick. It's probably, from my experience, almost a matter of minutes by the time they actually get it.
So in Delaware County, do you get a receipt that says they received it?
I have somebody hand deliver it. So, he knows he's delivering it to the county clerk themselves, and we get copies that they'll stamp saying they got it, but it's not recorded yet.
So you get a stamp
that they received it, not that it's recorded. Yes.
Saying that it was received.
Correct. Not necessarily recorded.
But is that not considered a legal anything?
Not until it's recorded, yeah.
Oh, shit.
I would assume. I don't know if anybody ever litigated that, but I would assume until it's recorded. But
they have cases about that stuff for when Philadelphia, before the e-recording, when Philadelphia used to take them a year to record stuff. So all those
it's
issues.
It's a nightmare. Yeah. It used to be so, and Philadelphia is amazing. I can almost get it done the same day now, which they used to be really bad. So ask if your title company does e-recording. They should. It'll help you out just to make sure that everything's getting recorded quickly.
So Bucks is pretty quick. How about Montgomery County?
Bucks is quick. Montgomery's quick. Everybody's pretty quick. Delaware County's the nightmare for most title companies.
So Philadelphia's quick and Delaware County's slow.
Delaware County does not e-record. So they don't accept it.
Is your name Chuck?
Yeah, they don't accept e-recording. So you have
Do you have any influence?
You have to mail it to
county? Yeah, no, Delaware County.
That's correct.
Grab the mic, please, because we want to hear this.
Yeah.
The recorder of deeds there just retired.
Gary, give him the mic, please. Gary knows all about microphones.
The recorder of deeds there just retired. He was the big stepping, obstacle down there. He basically said he didn't want computers. He would never have computers as long as he was a recorder.
Yep.
The Land Title Association was actually going to put a hit out on the guy, but we decided not to do that. So he has retired, and we're hopeful the e-recording companies are talking to the present recorder right now, but it's a work in progress, and we all have the same problems.
Yeah, it's a nightmare.
I mean, they were actually taking documents that they received with walk-ins and putting them in front of documents that were overnighted to them.
Yep.
So they were all out of order and everything too.
And
so there's all kind of problems.
And we get a lot of calls from home buyers that have bought properties and they're looking to make sure the taxes are transferred over or certain things are transferred into their name, and they're being asked to provide a copy of the recorded deed. Calling us, and I'm like, it's not me, it's the county, and they can't understand the concept. So it's been a really hard process for everybody in Delaware County,
and especially the school districts down there.
Yeah.
You got to be able to prove that you're in that school
Correct.
district, and if you don't have a recorded deed, it's a big issue.
And we have to tell people 3 or 4 months, right?
So,
and they're yelling at us, and it's like, look, we sent it out, and we UPS it out. We send it out as quick as we can, but you're stuck.
Are there any other counties that are problematic?
No. My only issue in Pennsylvania is Delaware.
Berks is okay.
Mm-hmm. I don't do a lot there, but I can't recall having an issue with it now.
What were you saying, Chuck?
Nothing.
No.
Every county has their own issue.
Yeah.
That's all.
Okay.
Yeah, rejections are another issue. That's a pet peeve. Right, Montgomery is notorious for.
All right,
I don't want to say anything, but yeah.
All right, talk to us about rejections because you were talking about that earlier.
Okay, so let's just say in general, we e-record, and there's certain standards the counties want for you to record a document. Certain font size, certain margins, certain information listed on the documents. Some counties list that information online, and they actually try to tell you. A lot don't. When I send something in to record, if it gets rejected, meaning it's not compliant, I usually get charged for that by the county. So, a lot of times, I'm sure Chuck can attest to this, there's a lot of rejections in certain counties for reasons that, and I've gotten into a lot of arguments with a lot of people in the counties, for reasons that you can't even figure out why they rejected it. And it's not something that they have written anywhere. It's not on a website. So you don't even know what they're looking for per se. And they reject it and send it back to you. And you have to pay them a fee and resubmit it. And a lot of times what they will do is say, for example, you may have, maybe there's 2 or 3 things wrong with your deed or mortgage. Who knows? They reject it. You correct it. You send it back. They reject the second reason. Send it back. They reject it again. So those fees are kind of.
Do they tell you?
Oh, they don't tell you up front. No, they'll tell you each specific time that it's rejected, but not all at once. And I did this. I did a commercial deal in Montgomery County. I think it was a $40 million acquisition in Montgomery County 10 years ago. I had a stack of documents like this to record, right? That were drafted by the attorneys. I went to the county with the documents prior to closing because I wanted to make sure they would get recorded, because if something can't get recorded, it's a big issue for me. And with that many documents and the complexity of it, there were subdivisions, there was all kinds of craziness going on. I went to this certain county, took all the documents there, met with a recorder. I was told everything was perfect and approved.
Which county?
The one we've been talking about, Montgomery County. Everything is approved. Everything looks great. I go down personally after closing to get everything recorded. This was before e-recording. They rejected half of them. So it just kind of shows you kind of the difficulties title companies face getting stuff recorded. It's a difficult process. Let's put it that way. And you often don't know why they are rejecting stuff. And in Delaware County, if God forbid something is rejected, you send it in, you may not get it back for 3 months. Then you send it back, you got to wait another 3 months. You know what I mean? So that's where kind of the difficulty lies in a county like that that's not e-recording.
And so how does title insurance work during that recording process?
Generally, I'm covering you until my deed gets recorded. So if something did pop up, I'm on the hook. That's why, as title agencies, we panic about counties like Delaware, because we have to get our stuff recorded as quick as possible. Yep. Yeah. And back in the day when I started, there was no e-recording. Everything was mail, and it was just a nightmare. You get stuff a year later from Philadelphia or certain counties. So it was really bad. Yeah.
So in the future, it'll be telepathic recording.
Let's hope so. Yeah, let's hope so.
Chuck, make sure your county takes care of that.
Let's hope so. Number 5, you're not covered for any kind of additional real estate taxes or additional assessments. So if your property is reassessed down the road after closing, I'm not going to cover you for that because I didn't know about it at the time. Number 6 is used, depending on the county in Pennsylvania, basically oil and gas mining rights. We generally don't cover that if it's in a county like Allegheny or something out west where there's a lot of gas and oil. We're not going to cover you for any kind of subsistence or some kind of issues you may have underground because of that. And kind of the last one, number 8, would just be anything specific. So when you look at your Schedule B2, it's going to list again, easements, restrictions, encroachments. They're generally always going to be accepted because they're on public record. I'm not covering you for it. You're taking subject to those filings. So again, please take a look at them to find out what affects your property. Endorsements we talked about a little bit. So endorsements are basically additional coverages you can get or a lender can get on the title policy. I forget how many there are in Pennsylvania. I looked today, 40, 50. There's a ton of different endorsements you can get. And again, they are extra coverages you get on your policy. They can be issued to an owner or a lender. Lenders are usually the ones asking for them. Most owners, unless they're represented by counsel or it's commercial, I hardly ever get asked for an endorsement for an owner. The lender's always going to want generally 3 in Pennsylvania if they're lending money. They're going to want a survey endorsement to know that they're protected for something that would be discovered by a survey. They're going to be covered for any kind of violations for restrictions or easements, and they're going to want an environmental protection endorsement. That basically says we cover them for any kind of environmental protection liens. If the property is a PUD, a condo, there's all kinds of endorsements for that we can issue to a lender, basically saying we're covering them for any planned unit development, which are, basically a lot of developments around here. Anything that's a planned unit, we can give coverage to a lender for. But again, owners generally, again, unless it's in a commercial context, I can't tell you the last time a residential owner asked for any kind of endorsement. I don't think that's a bad thing. I just think it's in a commercial end, there's usually an attorney representing an owner, so they're going to want every kind of coverage in the world. Why not? Because they're an attorney and they're going to recommend it to their client. So again, the big ones, I guess, from a commercial end is survey is huge. When I do a commercial deal, somebody's buying it, I'm always getting a survey usually. So I'm going to be able to give that owner a survey endorsement. Depending on the state, I know there's some states where you can use an old survey. So I would say check with your title company. Like we do work in Florida, and surveys are fairly standard down there. I can often give coverage if I'm getting an older survey. It kind of depends on how old it is. If it's the last couple of years, give me a copy. I can probably send it to my underwriter to see if I can get coverage for it. So it really depends on the state you're in as far as survey coverage.
Andy, I'm sure everybody in the room knows this, but I don't know what a PUD is.
Yeah, that's what Richard just planned unit development.
Oh, okay.
So,
because if somebody asked me what a PUD was, I have a whole different answer.
Yeah, right. Planned unit development. So, which are a lot of communities around here. Endorsement cost, it varies. Generally, when you do a residential deal, you'll see a $50 charge per endorsement. But again, it can go anywhere from 50 to a percentage of the title premium, depending on what kind of coverage you want for endorsements. Foreclosures, we talked about this, or I talked about this, I think, before I started speaking about us insuring it. I don't do a ton of foreclosure or tax sale work. I've done it over the years. And I think insurability depends on who you're using as far as the title company, who their underwriters are, as far as what they're going to look for to do it. I'm an agent for a couple different underwriters. If they're asking me to insure or give coverage to an owner buying something out of a foreclosure, they're going to want me to pull up the entire foreclosure docket. I'm going to have to look at every piece of paper ever filed in that foreclosure to see if I can insure it. We're going to look to make sure if every lien holder in there, whether they're divested or not, whether they were given notice of that foreclosure, whether the owner was properly served with the notice of foreclosure. So it's kind of a case-by-case basis. That's the best answer I can give you as far as getting foreclosures insured. Depends probably on who you're using, whether they want to do it. Some title companies may not touch them. Some title companies may love doing them. So it really depends. Tax sales as well. I probably do more tax sales actually than insurance out of foreclosures, but insuring tax sales really depends on underwriters and your agency as well. On my end, I have an underwriter that will let me to insure or issue an owner's policy on a tax sale as long as 1 year has passed since the deed was recorded. So if you buy a property from tax sale, go ahead.
Is that because of the right of redemption?
Correct. Yep. They want to see if anything jumps out of the woodwork. So, go ahead.
Are you finding, because I'm finding that underwriters are now increasing the used to always be 1 year. Now they're saying 2 years.
I have one that's 1 and one that's 3.
Sometimes won't do it at all.
I have one that's 1 and one that's 3. Okay. So, and the one that's 1 looks at it as the right of redemption is generally a year, which is the ability basically of somebody that was foreclosed on in a tax sale is to buy it back. So they want to wait that year to make sure nothing happens. What's that? Yeah, right. But I have another underwriter that says 3 years, and then even after 3 years, they don't want to look at it. So that's kind of how they are. They'll say, send me everything, I'll send them everything, and then they'll say no. So it's They just don't want to touch it because they just say there's too many issues. Yep.
I'm sorry, what's too many issues after 3 years?
Well, I mean, there could be issues with notice. That's a big issue they're concerned about. So a lot of times, someone that is foreclosed on, they're not waiting there at the house to be served with the sheriff papers. You know what I mean? They may not be there. They may be avoiding any kind of service of process by the sheriff of the sale.
Even after 3 years?
Yeah, sure. I litigated a case where somebody 6 years after a lawsuit went through complained they never got service. 6 years. And the judge allowed them to open up the case and go back into it.
I'm about to make a loan for a property in Norristown that allegedly has a 1 year right of redemption.
Yeah.
Is that a risky situation? Is 1 year held constant?
A tax sale?
Yeah, tax sale.
Are you getting title insurance on it?
Yes, of course.
Okay. Well, then, I mean, I would assume they would cover you for anything. It doesn't mean you may not have issues. You still would have to, if there was, God forbid, an issue, you got to file a claim and go through the process. But depending on
what?
Well, I mean, it's like filing any kind of claim. I mean, if you had an issue with something, that owner comes back and says, I never got notice, well, then you'd have to contact your title agency and probably file a claim, depending on, is the claim right? I mean, there's a million legal issues that go into it, but then how's the title underwriter going to view that claim? Do they pay it? Do they say we're not paying it? You know what I mean? It's hard to give a generality on a claim because claims can go a million ways. You know what I mean?
You as a title guy would say after 1 year right of redemption, you'd be willing to insure
Correct.
that.
I have an underwriter that is willing to insure them. Yep.
Okay.
I have another one that says, no way, I don't want to touch it.
Okay. Thank you.
One of the hot issues that came out last year is, which I find mind-boggling, is regarding foreclosures and tax sales. State of Pennsylvania, I think they make up their own rules sometimes, but inheritance tax, the state of Pennsylvania put out a position paper that they sent out saying that their view is if you're buying a property out of a foreclosure or a tax sale, if there was any kind of inheritance tax due, right, say the property was coming out of an estate, which happens often, even if the state was given notice of the sheriff's sale and was aware of it and never responded to it, the inheritance tax lien is not necessarily wiped out. So the state kind of has a position that inheritance taxes, if not paid, always remain if they're a tax or foreclosure. That's their view. And our underwriters have to take that view as well because that's what the state of Pennsylvania is telling them. The hard part is, from what I found, is trying to communicate with the state to try to resolve them. They have given us contacts, emails, phone numbers of people at the state of Pennsylvania to contact. Because what I can do as a title company is if I'm going to be insuring a property where I think it might be an issue coming out of foreclosure or tax sale, they tell us to contact the state to get a payoff figure or an amount to pay to release that lien. Unfortunately, my experience has been that the state doesn't respond to you. I don't know if anybody else, Chuck, if you have a different experience, but I've written to the state, I've called them, I've emailed them about certain properties that have come to us where people have bought them out of foreclosure, and the state was involved, and there's a possibility of an inheritance tax lien, and the state hasn't responded. It's been like 6 months. They still haven't gotten back to me. So it's been a big issue for people. A lot of people buying properties assume if they're buying it out of a tax or foreclosure, everything's wiped out. That's their assumption, which is not necessarily always the case. So I just want to point that out, especially with inheritance tax. The state takes the view that it's kind of always there unless you pay it. So kind of buyer beware regarding if you see any kind of estate in your chain, you're buying it out of a tax sale or foreclosure.
What about the federal inheritance tax that was to exist?
I would assume if they were given notice, they would be wiped out, but the exemption is so high for federal state that I haven't seen it even being an issue from my end. But
so Andy, our current president has set up a whole bunch of what he calls opportunity zones. Okay, for areas where the local governments want to see improvements made in those areas. Does that have any impact on title insurance or title?
Not that I've seen. No.
Okay.
Nope. Tenancies. Most people probably have an idea of this, so we'll talk to their attorney about it. But I just want to touch base with it because from a residential, and nobody understands what tenancies are. If you're buying a piece of property.
Can you explain it?
That's what I'm doing. Yep.
Okay.
If you're buying a piece of property with more than one person, you can choose how you want to hold title with them. Nobody knows what we mean when we try to explain it to them. We have forms that people sign at closing trying to explain it to them. People always ask what's your legal advice, which I really can't give just as a title company. So basically, you're buying a property with two people, individuals. You can choose how you want to hold title to it. Go to somebody like Beth if you have a question on it. But generally, the basic, what it means is if you're tenants in common, I always tell people, if God forbid one of you passes away, your share of that property is going to go through your estate, right? It's going to go to your heirs. If you have a will, it's going to go how you designate that in the will. If you don't have a will, it's going to go through the intestate laws of whoever your heirs are. If you're joint tenants, your interest is going to automatically go to the other person you're on the deed with, which you may want if it's a family member, okay? So that's kind of the two biggest things, whether you're tenants in common or joint tenants. And we always explain that to people. Most people don't know about it. They have a glazed look on their eyes when we try to explain it to them. But the biggest factor, there's other ones, but the biggest factor really is what's going to happen to your share of that property when you pass away, okay? Tenants by the entirety is really if you're husband and wife. So that's kind of only if you're husband and wife can you hold in that way. So again, just tendencies I want to touch on because nobody really gets it or understands what it is. Ask your title clerk, find out. Go to an attorney if you have a question about what kind of tenancy or how you should hold title with somebody if it's more than one person. Yeah, go ahead.
Oh, back to the foreclosure.
Yeah.
If a property is in pre-foreclosure, do the foreclosure points that you just had up there apply, or do the standard rules that you explained around title apply?
As far as inheritance tax? Or?
No. On your previous slide, you had points about foreclosure, like it has to go to an underwriter.
Yeah.
If I'm interested in buying a property,
and who are you buying it from? You're buying it from the person that owns it, not the bank?
Yes, from the person that owns it.
We would run it, and as long as I know if I'm getting a payoff from the bank, that loan is going to be paid off, and any attorney fees and whatever else are going to be paid off that may be involved in a foreclosure, I'm generally going to be fine with it.
And it doesn't have to go to an underwriter?
No. Yeah, we could do it ourselves. Yep.
Okay.
Yep.
So I have two quick questions.
Yeah.
Define wife. That's the first question. I don't mean to put you on the spot, but I'm curious about that. And second question is, of all of the deals, of all of the title insurance policies that you've written, what percentage ultimately require a claim? Just curious.
Yeah, so I guess a spouse or husband and wife, male, female, is generally how I view it as far as holding title as tenancy by the entirety. I haven't seen it in a different context in my experience, as far as two males or two females holding as tenants by the entirety. I haven't seen it. Claims.
I asked that question. Sorry if you interrupted.
No, go ahead.
Because this Norristown deal that I'm talking about is such a deal,
right?
Where the owners are married females.
Yeah,
there are two females.
Right.
So, and they're, I think, I haven't seen a marriage license.
Yeah, I would assume if the state you're in recognizes that type of marriage, they could hold that way. I just haven't seen it though.
Yeah.
I haven't had anybody ask me for it. Yeah.
That is a great question.
Yeah. I haven't, I'm trying to think, I
So if
haven't
you
seen
buy
it.
a property in a state where if you buy a property in a state, another state that marries two people of the same, but you're buying the property here, Pennsylvania doesn't have a marriage license for two people of the same sex.
Right.
So would the Pennsylvania law apply? That's a new issue.
Yeah, I don't know.
It's not that new, but it's.
Well, you would have to ask.
Yeah, it's not new.
You would. I would make sure your underwriter tells you the answer because they're going to have to decide.
Tomorrow. Yeah, it's a good question. Claims.
Great question.
Very few from my end.
Like 1%?
So,
less than 1%?
Probably something like that. I'm trying to think of, with my current company, knock on wood, none, but I'm trying to think of over the years doing it. I've seen claims I've seen a few for lines of credits, like I talked about in the beginning, where maybe a seller draws money on a line of credit prior to closing. So there's additional money owed that we don't have a payoff for. I've seen it where a seller maybe takes out another mortgage right before closing that we don't know about, and it gets recorded. I've seen that happen a couple of times. So those are the biggest areas that I've seen where basically the seller is putting another lien on the property that the title company's not picking up prior to closing because they're doing it probably so close to closing. That's the biggest areas that I've seen as far as As far as claims, inheritance taxes are a huge issue. We deal with that all the time. A lot of people have claims for that. Flips, I know you guys probably are involved in a lot of flips. There's always been a lot of bulletins that are put out by underwriters about it. I mean, the typical is flip that I see. I don't do a ton of them, but it's typical the A, B, C, where A sells to B and then B assigns it to C. And you could do either 2 transactions or 1 from what I've seen over the years. I often just see 1. Most underwriters, I'd probably say check with your title company about doing them. Some title agencies hate flips and won't touch them because they just think there's something weird going on. Some title companies
like
will.
What? What's weird about a flip?
I think they're
no, not the flipper, the flip.
Yeah, I think they worry about they're worried about just the parties knowing exactly what's going on. I think they're worried about if C is paying more for the property than maybe B was. Is there a problem? Is everything being disclosed to everybody? I think that's the biggest thing they look at is disclosure. Does everybody really know what's going on? Is somebody being deceived? I think they've had some issues, the underwriters, with lenders maybe not knowing. There might be a lender on the C transaction that maybe wasn't aware of the A to B. The lender should be aware of that. So I think they're just worried about disclosure from what I've been told over the years as far as flips. Yeah.
A couple of hands here.
I think I was understanding that comment to be wholesaling because I'm doing one right now where, the A is the seller, I'm the B guy, and I'm going to assign it to C.
Yeah.
And what my initial concern the first time I ever did that was, do I have to pay a transfer tax?
Yes.
And the answer is, if I never really take possession, and if your documentation says assignee, then you're good to go.
Yes and no.
Only if you do a double close.
Well, if you call, I'll talk about actually transfer tax now on assignments because I've talked to the state a couple of times about it. We have numbers in the transfer tax division. I get different answers every time I call them about transfer tax.
What are the different answers?
So the answers are, if there's an assignment, they will often tell me transfer tax, well, they'll always tell me transfer tax is due twice, not once. Even if you do an A to C transaction, they'll say transfer tax is due twice if they find out about it. That's what
Wait.
That's because the state always wants.
Beth, use the mic, please.
That's because the state. Nobody very rarely at the state will they tell you you don't have to pay a tax. They will always say you have to pay a tax.
Yeah.
From a legal point of view, if there was never the transfer tax is when a property is transferred to you. That's when a transfer tax is due.
Ownership is transferred.
Ownership is transferred. If ownership is never transferred, I'm not saying the state doesn't say that because I'm sure they do.
Oh, yeah.
But I don't know how they would actually get a tax from you if you never owned the property. Mm-hmm. And so I'd be willing to fight that fight because that's crazy.
Yeah. So again, if you call the state, right, if you call the state, they'll tell you what's due. Right, it's a matter of.
Because they want the tax.
Yep, and they gave out a bulletin, which you can look up the bulletin online. I kind of put like the bullet points of it. They put out a bulletin years ago about how to not pay or avoid the transfer tax on an assignment, and you have to go through a bunch of stuff. It basically says that if you're transferring it or assigning it, you have to kind of fill out this checklist.
Is that legally enforceable?
What?
If you don't pay the double transfer tax?
Well, I mean, that's kind of...
depends on who's doing it.
The first question is, right, how would they know? I mean, they do, I think, randomly audit files, and sometimes they send a letter out to us. Say if I do a transfer from husband and wife, every now and then they'll send a letter out saying, hey, send us proof that they actually were husband and wife. So sometimes I don't know the system or how they actually pull or look at recordings or filings to check for transfer tax. But we do get letters out when they ask us for information on the file.
So a wholesaler, right, writes up an agreement of sale with the seller with an assignment clause. Can there be language put in the agreement of sale that somehow absolves them of not paying transfer tax? That's what you're talking about.
The state would want you to follow this memo they put out as far as not paying transfer tax twice, which is here. So they want it as, so if it's like A, B, and C, usually people are transferring to an LLC or something like that eventually. They want to know that whatever company is eventually getting that property was formed prior to the agreement of sale being entered into. They want the agreement of sale to state that the original buyer is acting on behalf of a yet to be formed, they call it a special purpose entity. So there's all these hoops they want you to jump through. I've never seen anybody do it, to be honest. The initial agreement of sale states the buyer has no intention to obtain legal or equitable title to the real estate. So that's what they want you to put in the original agreement of sale per a memo they put out. I think it was like in 2008. I forget.
Do any of the wholesalers in this room know about these rules?
I don't think anybody knows about it, to be honest. But
Andy did go over that with me before.
Oh, you did? Okay.
Yeah.
Well, that's, that doesn't count. How about, who's in the back? Smarty, do you know about this? Smarty, Tim, do you know about this?
No, you know why?
You have all this built in? Okay.
yeah,
Gary? Use the mic, Gary.
I was aware of it because of a conversation I had with someone else, actually in regards to the liability that occurs in doing an assignment of property.
Okay. Well, this is good stuff.
So even ask me, I can find the memo for you guys and send it if you want it from the state. But like I said, if you call them, they'll say it's due twice. I've even talked to the state about this bulletin that they issued, and they weren't even aware of it. So it's they're hard to deal with. So I tell people, contact an attorney and let them give you advice on transfer tax if you're doing an assignment. So at least you know what's going on. So if you're only paying it once and maybe you're not filing this, at least you know that perhaps the state could contact you and tell you you owe double. From a title end, transfer tax is not something we cover generally. So if you get a letter 6 months down the road that you owe more transfer tax, I kind of wipe my hands of it and say that's your problem because it's not covered as part of my title policy. So that's good for us.
Because you're covering between A and C.
Yeah, and transfer tax is not covered under a title policy generally. So it's not something I'm going to cover you for anyway. So be aware that it could be an issue, I tell people, if you're doing an assignment. Now, what I've seen is most people only pay it once. And they figure, kind of like Beth said, I'll wait to see if the state contacts me. And I don't know of any circumstance where the state has. But if you call them, they will tell you. I'm just saying, they will tell you it's due and you better pay it. So
use the microphone, please.
Yeah.
Even when you call the PAR hotline as a realtor, I was told that you have to pay the transfer tax twice.
Yeah.
And I'm looking for it. I'm just looking to see if it's actually in their PAR form for their agreement of sale.
And the fun part is if you call the state and ask if it's taxed twice and they say yes, and you ask them how to calculate it, I've gotten different answers. So some will say, say it's like A to B for 100, and then, maybe B is assigning it and to C and making 20,000 off of it or something. Maybe that's the assignment fee. The state has told me they want it taxed at 100 and 120 on certain phone calls. And other times they said 100 and then just on the 20. So the state can't even tell me how to actually calculate the transfer tax.
So is it best to call before lunch or during lunch?
Yeah, you know what though? They have
or don't call, right?
They have an accessible phone number and they always pick up. Like they're great. It's just, it kind of depends on who you talk to.
The fact that they can't tell you how to calculate it is your clue to the fact that they never collect it.
And last time I talked to them, right, and last time I talked to them, I asked them about that bulletin that I was just referring to, and they didn't even know about it. So it's good luck.
Jeff, use the mic, please.
Yeah, go ahead.
So if this double transfer tax is enforced, does it fall on C to pay both taxes if C is ultimately?
Yeah, they're going to send it to the buyer is where they're going to send it to the eventual buyer, C, right? They're going to send him a notice saying it's a lien on the property. Right. So yes, because they will say it's a lien. Yeah.
So if the wholesaler assigns it to somebody who intends to fix it and then sell it, that person who bought it from the wholesaler.
Yeah, they're going to want to lien the property to the state if the tax.
Could they put a lien and then D person has to pay for it?
Well, I guess.
Or C has to pay for it at closing with D.
I would say C would probably pay for it at closing with D if the lien is picked up.
Yes.
Yeah.
Yes.
Right. If the lien is picked up.
Don't tell them, Jeff.
Yeah. Right. I just wanted to end with kind of a hot topic, deed fraud, wire fraud. I kind of talked about deed fraud a little bit as far as you guys buying property. We always get nervous again when we see somebody buying a vacant piece of property, especially in Philadelphia, especially if it's been owned by somebody for a very long time. We have to do everything we can to verify who is the owner. Again, if we see a transfer for $5,000 or $10,000, then a few months later it's being sold for a lot more. We have to check that to make sure everything's okay. Wire fraud is a huge issue. Now, a huge issue, and I'll give you just some examples and some things to kind of look out for. If anybody sends you an email, even if they call you to send a wire, don't send it unless you can independently confirm where you're sending your money to. And I'll give you some examples. We did a closing for a lender last year. A residential buyer was bringing, I think, $28,000 to the table. They got an email the day prior to closing from the lender. I mean, it was made up, but it looked, I saw the email, it had their logo on it, their address, their phone, everything looked perfect. It had the exact amount they were bringing to closing, it had all the details of the transaction, and it said, Don, for your closing tomorrow, please wire your money here. And the buyer did it.
Was the email address correct?
It was not. It was off by like one letter.
That's right.
And that's what it was. And the buyer didn't know. The buyer wired $28,000 to this account. It was in Minneapolis, and it's gone. So she went to the FBI. I don't know what happened with it, but she lost that money. We did a closing a month ago, and the day of closing, one of my girls got an email from the seller. They were getting $160,000. Morning of the settlement, we get an email from the seller's email. It was his email address saying, hey, I want my money wired here instead of me getting a check at closing. We know to look out for this because you can't really trust an email. Turns out the seller's email was hacked. He told us at closing. Somebody had sent a fake wiring instructions to us. Thankfully, we caught it. But what's even crazier is the person that had sent that email called our office during closing to ask when the wire was going to be sent. And when we questioned them, they hung up. So there's a lot of just craziness going out there. We've seen it where I think there was a Tata company in Jersey had a problem where there was a closing. They got a call saying, I'm Andy Salvucci, attorney for Joe Smith. He wants his money wired to my trust account. I'm an attorney. And they sent over, I think, a fax on a law firm's letterhead. The person working on the file believed it because it was purportedly from an attorney. It was like $150,000 they wired out. That's gone. So it's a huge, huge issue. I just always tell people, obviously, don't trust any kind of email, even phone call. Like if we get a phone call from somebody telling us to wire it, we have to independently verify who they are. So we'll try to figure out, we go into our file and get a good phone number for them. We'll call them because this stuff it's crazy out there nowadays with wire fraud. It's a huge, huge issue. Be careful of it. And make sure if you're selling a property, you're getting your money wired. Make sure the wire's sent. I always tell people before we leave closing, I don't know, a lot of people just leave and hope it's going to get wired. Make sure you're getting the wire. I mean, title companies go out of business, crazy things happen. Make sure you're getting the wire and that you get a confirmation. I'm amazed at how many people leave the table. And it happens because people are busy and things happen, but people leave the table without their money or without knowing their wire was sent if they're selling something.
Yeah, they call that a soft close.
Yeah, I mean, and sometimes it happens, but follow up, make sure you're actually getting what you're supposed to be getting. And that's it for me. Thank you. No, thank you.
Great job.
Thank you.
Okay, Annie, go ahead. Grab a mic, please.
Hi, I had a question about dollar deeds. For the last property we bought, we asked to do a dollar deed. So in the Montgomery County property record, it says the sale price was $1.
Yeah.
But in Zillow and Redfin, it actually displayed the actual sale price. I'm wondering if they got that because of the transfer tax?
I was going to say my assumption would be the transfer tax.
Okay. So then what if we do a dollar deed and then paid both sides of the transfer tax? Does that...
I mean, I would think it's still going to come up because if I'm paying it at the time of recording, it just shows up, on that deed. I think they kind of electronically stamp it and they show the transfer tax on it. So I don't know if you could...
Right, but if we pay 2%, like for the buyer and for the seller, then would it display the 2% versus the 1%?
It usually displays when I record the whole amount, regardless of who's paying it. You know what I mean? It's going to show the whole amount on the deed when I record, regardless of who's paying it. Because it's, you know, it is being paid from my account, you know what I mean? So they just know I'm paying this total amount in transfer tax. And the deed is stamped with it on the front. Yeah. Anybody else?
Any other questions? Oh, come on, guys. I know it's late, but it's not that late.
All throughout.
That's true. That's true.
All right. Well, are you willing to stay for a little bit to
Sure, yeah.
answer some other questions?
Sure, yeah.
Okay.
Yeah, go ahead. No, go ahead.
Elaine, go ahead.
So just remember when I asked this that Don pressured me.
Yeah, go ahead.
So
it's not about condos. Is it about condos? No.
I have heard that I am vulnerable when I send my money to a title company because if an employee of the title company takes the funds,
yeah,
there is no coverage for that type of incident. Is that true?
I would say no. Yeah, I would think you'd be covered because there's a couple things I have. I have the errors and omissions. I have bonds that cover me, and my underwriter. A lot of times I've seen it over the years. People do take money. I've seen agencies close, and I've seen it from my experience. The underwriters are generally going to be paying that claim.
Okay.
Yes.
And then I don't know if I missed anyone asking this question, but will you share that presentation?
Yeah, I think, yeah, I have it on my computer if you need it. Yeah. Yeah, absolutely.
If you give it to me, I'll be glad to distribute it. Yeah.
Thank you.
Yeah. Thank you.
Also, Elaine, do you not go to the closing yourself? Physically, one of you guys go to the closing? Well, then take the check with you. I go to the closings myself personally, and I hand the check over when everything is signed. I don't wait. I don't send it ahead of time. My goodness. Yeah. Go ahead.
Yeah, and you know what? Along those lines too, some title agencies don't even want checks anymore. So you might have to wire them the money prior to closing. I mean, we still take checks, but a lot of
certified checks.
Oh yeah, I know. There's some I know that will not take certified checks.
I haven't met them yet.
Yeah.
Do you take certified checks?
Yes, but I know some that don't because maybe they're afraid it's made up, photocopied. I mean, stranger things have happened. But I can't remember the names, obviously, but I know there is a title company that somebody was buying from, and they had to wire the money. The title company would not take any kind of check. Bank check, certified check, wouldn't take it. They said wire only. Then they knew. All right. I think it could be time delay or just concern about maybe the check not being valid. I mean, if I put a deposit in today, it'll clear by tomorrow. So they do clear quickly as a title company because the bank is so used to seeing so many checks go through. But
so can't you call the bank and say, is this a valid check?
I do. A lot of times I do, but I can't answer for that title company. They just don't want to deal with it. So they only take wires.
Wow.
Yeah. Maybe they don't want the risk. I don't know. They only take wires, which
haven't met them yet.
Good for them, I guess, that they're getting it ahead of time. But
all right,
was there another question? Go ahead.
I learned something new with the mechanics liens being in trouble. So this is a wrinkle that I've just run across for the first time, and that is the seller is broke and needs some money to move out, and to put down a deposit on an apartment where she's going. So I had offered to give her, instead of putting money in escrow, earnest money, to give her money up front and then put a lien against her house to protect me in case the deal fell apart.
Mm-hmm.
Now I don't know what to do. Do I give her the money or do I not? Do I put it in escrow and say, I'm sorry, you're on your own? And then
I would say consult with your attorney first. But I mean, I've seen it where people, if they're giving somebody money prior to closing, I've seen it where they'll file a mortgage in the note. I mean, they'll have a note signed and file a mortgage in the county so it's recorded. So if that person goes to sell it, I would pick up the mortgage and you would be paid. That's what I've seen the most. I don't know if Beth can speak to maybe her doing it herself for people, but you could have them sign a note, which is their personal obligation to pay you whatever amount of money. The mortgage you would file in the county, right, which is the security instrument. If you had to foreclose or get paid, I would pick it up prior to closing. So if the person backed out and didn't sell it to you and they were going to sell it down the road,
it's not Delaware County.
Yeah, right. If it's Delaware. Well, it was funny is I had somebody ask me to do that. They wanted to file a mortgage on a property that they were going to, I think, eventually be almost buying from them, but they were trying to do it quick. And I said, it's not going to happen. I told them, don't even do it. I said, because I can't guarantee that mortgage is going to get recorded in a certain amount of time. And they couldn't understand why. I said, it's the county. It's going to take 3 or 4 months. They ended up doing something different. But yeah, I mean, that's how I've seen it, where somebody would take a note out and a mortgage. Okay. And of course, you got to enforce it if they don't pay, but at least you have something filed in the county.
All right.
Yeah,
That works.
that's what I've seen.
All right, thank you.
Any other questions? Going once, going twice. Yes, go ahead. Kenny?
This is on mechanic lien
Yes.
as well. Earlier we spoke about the mechanic lien isn't
Covered for an owner, yep.
Kenny, hold the mic to your mouth, please.
as builders, sometimes we'll get lien waivers from the contractors. Is there recourse against the contractor? I would think there would be for violating the lien waiver that he signed.
That's,
I mean, the numbers are big. I mean, you know,
Sometimes you have to file a lawsuit. I would have to hear the issue to be able to answer the question.
I don't have issues.
Well, as a lender, I want lien waivers.
yeah, and again, for a lender, if it's a purchase money, I can give you coverage for mechanics, just not that owner, which is scary, I think.
Yeah.
Right, depending on the builder, yeah, right. If it's a big builder, you could say, all right, I know them and they're good, but, you know, a lot of those big builders went out in 2008 and there were a lot of title claims for mechanics liens, which is why they don't cover it now.
So I have perhaps a very strange question, even stranger than some of the others. I'm not sure if this is covered by insurance or by title insurance.
Yeah.
It has to do with pre-manufactured homes.
Mm-hmm.
So you order a pre-manufactured home from the manufacturer.
Yeah.
You put a deposit down. You wait 6 to 8 or 10 weeks, whatever. They deliver it by truck to the site.
Mm-hmm.
They unhook the tractor from the trailer.
Yeah.
You hand the full amount of money owed to the, I guess, the truck driver, who presumably represents the manufacturer. Only then can you remove the buildings from the flatbed. Now, my question is this: between the transfer from the flatbed to the foundation, right, during that transfer, who owns the building?
I don't know. I mean, I would assume the person transport. I mean, I would assume the original seller until, is there a deed? Like what's being transferred? What's being signed?
That's my question.
Yeah. I mean, I haven't done a lot of them, but we can insure, I think, a manufactured home if it's affixed to the property.
Once it's affixed.
Yeah. Once it's affixed.
I'm talking about when it's in the air.
Yeah. I don't know. Well, actually, I mean, as far as damage to the house.
Yeah.
If you're a carrier, you have insurance, don't you? I mean, that's what I would assume too. If somebody's transporting goods, they have some kind of insurance to cover them for damage, I would think.
Well, there is. If you as a contractor, one of the options that you can get is to cover the material that you're buying while it's in transit until it gets to the site. And it's the same thing.
The lift.
I understand.
Yeah.
It's not real property. Beth, you can comment on it, but it's not real property until it's attached to that foundation.
Right. So who's responsible?
So it's personal property then, and who owns it at that time?
Yeah.
Is whoever ordered it should have the coverage for delivering it.
The house.
Who paid to move it from the truck to the foundation?
And title-wise, we're not casualty. You know what I mean?
It's
so
not
damage
title
wouldn't be covered,
insurance.
right?
Well, that's what I said at the beginning.
It's not title because it's not real estate until it gets to the ground. So you can't insure it title until it's on the ground.
It's unreal
So
insurance.
you want to make sure you have another type of insurance until it gets onto the ground, like property insurance, or the trucker is insured. That's what you want to make sure.
Yeah, it's actually not the trucker; it's the crane operator.
Or the crane. You want to make sure that they're insured.
Okay, it's actually not such an. I was. It's actually not an easy answer. I don't think it's as simple as Beth is saying.
If you have a separate crane company lifting from the truck, that would be on his liability insurance.
And what
so
you
the
want
guy
to
who
do,
delivered it is responsible until it's off his truck. The crane guy is responsible until it's on the foundation. And then I suspect that's when the deed for the house becomes real property.
and what you want to do is you want to get them to add you as an additional insured.
Oh, good idea. Okay.
That's what you do.
Yeah.
Get them to add you as an additional. So you want to get the truck guy to add you, and you want to get the crane guy to add you.
All right, that's the magic words. Okay, thank you. All right, I told you it was a dumb
Thank you.
question.
It's all right. Not a dumb question.
Dumb question.
Never a dumb question.
You haven't heard the rest of them yet.
Yeah, right.
Any other dumb questions or otherwise? In that case, let's give Andy
Thank you. Yeah,
a
thank
great
you.
round of applause. Thanks, Andy.
Thank you.
Great job.